I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market dropped this week as investors had to deal with some big surprises. Earnings reports were mixed, and so they were actually a bit weaker, and retail maybe led the way on the downside there. That was the worst group, and I'll show you that in the worst for the week coming up. And there were no real leaders in the stock market that did well that could rescue what turned out to be a pretty rough situation. There were surprises, and surprise number one was the Fed, where the FOMC meeting came out. They cut a quarter point. That might not have been that big of a surprise, but it was a disappointment to investors that were looking for potentially a bigger cut, and certainly to President Trump, who was just pushing for a half a point cut. In the news conference from after the FOMC meeting, Powell's comment brought big selling. What he said was that, well, it's not likely that this was a new cycle of lowering interest rates, and it was probably more like a mid-cycle correction. The reiteration of that it's a strong economy and low inflation and everything was pretty much the same line that he gives all the time. But investors got really nervous about that, and stocks got pummeled. They were up a little bit, but they fell to down 330 points on the day based on that news. World conditions certainly are not that good, and he must be wearing blinders as far as I'm concerned. German yield curve has now inverted for the first time ever as the 10-year Bund goes down to a negative 0.5%, 0.503 to be exact, and that's below the ECB deposit rate of -0.4. So what could be really bringing something like that? Only a horrible economic condition that's out there. And in the UK, the pound implodes, and that's likely because there's going to be a Brexit that comes that's a hard Brexit, and that will shake things up there a lot. The European growth rate, Q2 estimate, 0.2%. Japan at about 0.7%. United States, well, maybe it's a little more than 2% if you believe what we're hearing out there. And, this is really proof that the central banks are ineffectual. They are crippling the economies by putting a dark shadow. Nobody in business knows exactly what the economy would be like without the Fed, the central banks doing what they're doing. So why should there be capital expenditure? Why should they grow their economies? And of course, when there are tariff battles out there, that makes the businesses even more afraid to grow the economies. That brings us to surprise number two. On Thursday, the markets were recovering. After that big hit on Wednesday, the Dow was up over 300 points. And just out of the blue, President Trump tweets that he is now going to put a 10% tariff on the other 300 billion of Chinese goods coming into this country. The Dow pummeled. It came down 600 points. It was up over 300 and fell to -300 on the Trump tweet. Safety bids came in everywhere. 30-year bonds screamed up 2 points. Gold moved up $17, and the commodity markets got hit. And oil in that commodity market, the biggest loser of all, 8% on the downside that day, the biggest one-day drop in 4 years. Trump said that talks were going very well. Everything was very constructive. What a friggin' joke that is when you listen to that. How well could they be going if he comes out and puts these tariffs on? And he says, well, they promised to buy our grains, and they didn't. Essentially, this deal is going nowhere. And now the Chinese are coming out and talking about retaliation. You got to wonder how much retaliation that they can do when if they do something, it's going to badly affect their economy. So we'll see what they come back with, but it's likely to be hitting with something very lightly comparatively, and we'll see where these talks go. But playing out the Mnuchin and the president and all of them, they've been playing out lying to us. They're lying to us about this situation, and tariffs are horrible for everybody. I don't care what the president says. We pay for them also. So that's horrible. And the stock market, well, investors, they've been driving the market up and hoping that more stimulus, the drugs that they're getting, are going to continue. Interest rates, they thought, would fall into 2020, and then Powell says maybe not. Well, we thought the inertia that the stock market had, positive momentum, was going to last and bring the S&P 500 up to at least 32. It got within 4 points of that at the end of last week, and now we think we're entering into a period of higher volatility as the time is now right and that level has been reached that these high valuations are likely to really start to take effect. And central banks, they're already crazy with these low rates, so you got to wonder how much more they could do anyway. So the topping period, well, I think it's just ahead. Maybe it started right here. These top levels that we're seeing right now maybe really have declared that is it. That's the best we're going to see. I thought we could see higher, and that maybe out into the fall when we get some tests of these levels. But now we think that it's really going to be a situation with two-sided market and some pretty wide swings. When you look at some of these major stocks out there, they are looking like some big tops have come in. I'm going to show you a few stocks coming up in a minute, but there are a lot of stocks that look like they have topped. And now, as far as traders go and these wider swings, I think we're back. I think there's going to be a lot of opportunities here. For the week, stocks, the major index is down 3 to 4%. The bond market, 30-year, up about 3.75%. Yields plunged. They got absolutely wrecked. They were trading at about 2.08 and fell 22 basis points. They got as low as 1.86. That is just an incredible move in yields to the downside. If that isn't a call for recession, I don't know what is. Gold up $38 is definitely a safety bid in there. I'm going to show you that I think we're going to widen our range a little bit or move it up where there's a little more upside now. Dollar up about 0.3%. So gold flew on a week that the dollar was up. That's pretty significant. Though the dollar was really strong, the yen was stronger, and that's something that we expected also. Oil only down $1.10 on the week right now. It was much worse. It had been up. It plunged at 8% and now has rebounded here at the end of the week. But that was much, much worse. Follow us on Twitter at askSlim and become a YouTube subscriber and give me a thumbs up if you like this video. Yes, I am off camera right now because I'm traveling and I'm on my mobile studio. I'm going to do more of this where I'm away from Chicago, my home base. And down the road, you may only see me doing videos like this and not on camera. So we're working towards that. I hope that you still got a lot of good information out of this. And right now, I got some good stuff to bring you.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are high, these upside moves are selling opportunities.
All right, for the best stocks for the week, I'm going to look at stocks that are in my universe of 320 stocks. I look at some of the widest held stocks, and then those stocks we do our cycle analysis on. I look at weekly, I look at daily, I look at interdays. Mostly in this section, though, I bring you weekly stocks, and we're going to start now with looking at the biggest stock for the week, which is SunPower. Solar did really well this week, and SunPower drove it on the upside. You can see in here that SunPower moved up through fib extensions right over there, and then got all the way up to the 2.618 fib extension. That is a really strong market that you see that's able to do that way up over here, and then it stalled. That is, it moved through this fib extension on the bottom and then had that big breakout. This has been a giant move. The stock moves up from $4.50 to 16. Talk about a move. That's almost 400%, 300% actually, that it has moved, and just tremendous. It had a huge earnings report. It drove up the other solar stocks. We loved First Solar. That went up. I hope a lot of you did well on that. CSIQ is one I'll show you now also. In the best 5 for the week that I'm going to show you. And CSIQ moves up about 7% on the week. You could see it was much higher. Note that resistance zone. It's having some trouble in that resistance zone right now, and we got a sense it's going to stall in that area. You could see it tried to get up there. I think there's going to be a better buying opportunity here in CSIQ. First Solar, I think, still has upside room. SunPower, I think, has come a little bit too far, and I would wait on that one. Kellogg is the next stock we're going to look at in here, and that is a stock that is a pretty widely held, and this stock's been in a lot of trouble, you can see. Now, our cycle analysis is suggesting, well, I blew that in too much, let's come back out, that we're in a rising phase. You can see that, and it came up and touched the 61.8% fib right there. And then there's the 78.6 up there, near $70. It could try for that. This is a much better pattern than it's been. You can see our projections suggest that there's going to be a correction coming that you can see right there. And that is likely to give you a pretty modest pullback in here, and then likely trying again. We're looking for September, October for it to make its highs for this move. And like I say, maybe it stalls at this 66 again, but it definitely could take a shot up at 70. Better earnings reported in there as the stock moves up really sharply. Amgen, AMGN, is the next one we're going to look at here. And you can see that there are some nice upward movements in there off of a very key level. Messy chart, isn't it? Well, there's a ton of information in here. And you can see this last cycle was a negative one. That's that down arrow right over there. And it rallies and then gets down to this lower support area and then explodes up. Hits the sell zone and then stops. That sell zone comes in our swing high, swing low analysis that comes out of the last cycle that you see in here, and that's really where it stalled. Maybe the stock could make 192 on the upside, but we really think it's going to have trouble in there. Again, we think the political environment is not going to be great for healthcare. And earnings beat on this one. It had this big upside week, but we think in the next few weeks, up around 190 to 192, that it is going to be a selling opportunity, and that's what we would do if we owned it. Humana in the same group. This rounds out the fifth stock we're going to look at in here. Maybe this was these boosts were partly because of the moderate Democrats that we heard in the debate. There were a few of those out there and that might have been making a little more sense than the crazy left-wingers that are there. Usually when I say crazy left-wingers, I get thumbs down on these videos. So we'll see. Maybe if you like when you hear that, you will then give me a thumbs up. But I don't have any problems saying crazy right-wingers either. And I think that the Fed are in that category when it comes to it. So here you can see the look here as it moves up into resistance zones right over here. And I think that the likelihood of this getting much higher is pretty small. As it gets up near that cycle peak resistance, I think it's going to pull down pretty soon. And you can see that we have it declining here into October. So I hope I don't get too many people wrong when I make pissed off when I make those political comments. But I'm a libertarian and I look at both sides, and I think that the healthcare group is going to be under a lot of pressure when we get into this really deep into the political environment. So in this case, we're going to look for a pullback under 275 on the stock between now and sometime late September, or maybe into early October. That is the best stocks for the week, and now I got coming up, well, some bad ones.
Coming up are the worst stocks for the week. There are some real stinkers here. Some of these are breakdowns or extending losses in really bad chart patterns, and some present great buying opportunities. Watch as Slim makes that all clear to you with his very unique analytical style.
All right, for the worst stocks for the week, again, we look at our stocks that are in these categories of big downside movers, and there were quite a number of them. While there were only a small number of stocks that moved up, there were a much larger number of stocks that moved down significantly, and we're going to take a look at those. So there's the last one I looked at for the best was Humana. Now we're going to switch this over to Fluor, FLR. Look at that. So you see the stock has been putting on these declining cycles. You see each of those making lower lows. The low here, a much lower low here, a lower low here. That gives us, again, our swing high, swing low analysis that gave us this sell zone right there. And you could see it plunged after that, just moved significantly to the downside. And that was a stock that we were very cautious on. And you got that big break. They actually reported a loss. Their guidance was not only weak, but they completely withdrew giving guidance. That is usually an extremely bad sign. We have the stock going lower, sub 20 out into October, November, so you can see how weak that pattern looks, and we expect that it will be constantly getting sold, even if it tries to get some bouncing in. So Fluor is an example of what we have had in here with just really, really high expectations on stocks. We had high valuations on stocks, and now we're talking about significant tops made on stocks. This one may not look like a significant top to you, but when you look at Under Armour, UAA, that is what a significant top looks like. So first of all, you can see the stock has these beautiful cyclical patterns. On the bottom are cycle brackets. There's a dominant and a minor cycle in here, and you could see each of those very clearly. Now, what happened was that this first minor cycle that you see right there, that gave you a nice positive pattern. It said you were going to go to a new high, and you did go to a new high. But then it broke down with this massive downside week, and Under Armour earnings miss, guidance much weaker, and this stock has really moved to the downside. I think it continues down into a mid to late September here, and probably down to this area under 20 right in here. So Under Armour had made these big gains. Everybody was loving it, but retail's got problems, and they keep saying the consumer is going to keep driving us. Well, that is not the case. Consumer is massively indebted thanks to the Fed pushing people to borrow money. They want you to borrow and spend, borrow and spend. That's what hurts the consumer. 21% down on the week. For Under Armour, you had a lot of other retails weak. Best Buy, Bed Bath & Beyond, and Dillard's all down about 10%. So some very weak retailers out there, and this is not a good story anymore. NetApp is the next one we're going to look at, NTAP. And you can see as we look at NetApp that it has a major breakdown. So what we're looking at here, we had a positive cycle forming. You can see that. And it comes down and it gets pretty low, that close to that low that it made over here. And then it rallied and broke that support. That was an ugly thing. And when it did it, it just literally collapsed. This could go all the way back down to the $38 area. The next low timing is in mid-October. So you can see the low timing right over here in December, the low timing right over here. That was a bullish cycle in July. These are very bullish cycles when you get that, and they get driven up, these moving averages, and then when it turns negative, well, it tells a story. And this one, well, it continued to move to the downside no matter how much it fought its way up. This is a breakdown, network appliance, earnings missed, analysts downgrading it like crazy, 20% down on the week, and it is a sell. Really a bad looking stock. And Square, now this is one we have warned and warned on. The valuations were so incredibly high on this stock. We weren't sure which scenario we were going to have here. The PEs were, projected PE was about 70. It was over 100 PE for the last 12 months. We thought it was nutty as far as the valuations go, and you can see the stock moving down. So there is a minor cycle in here, and the minor cycle is now falling. You can see that in your bottoming period. That likely will give you a rebound in here, and it will be a sell. We'll be looking for the place to create the sell zone in here, and we think it's going to move down again. You see the higher scenario we had given it if it was more bullish, getting up to that major 78.6. Well, it's now clear. It's not going there. We're going to be removing it, and we're going to be looking for it to get back down to this area under $60 here between now and October. So this is a really bad story for Square. PayPal follows it on the downside, 6% down, and I think it's a big top in PayPal also. Done for in there on the upside. And semiconductors have been a tower of strength recently, and AMD has been one of the leaders in that semiconductor sector. And now it looks to me like it's topped. We've got this big engulfing pattern right over there that makes a top only slightly above where it was 2 months ago, and now has moved down. This calls for a decline into late September. We think it will test the 34-week moving average right over here around 26, probably then get a rally into the fall, and then complete this whole big head and shoulders topping pattern likely, and then move down again. I think it's likely to move down close to 26, but question is, do you want to sell it now or do you want to wait for the rally out into the fall? It's a big question. I think it's a major top. I don't think you'll see 34.86 again. So that, in my opinion, is just a bad looking stock. Overall, we've had a lot of stocks that look horrible this week that put in some major tops, and I think that is very significant. That's it for the best and worst stocks for the week. And one of the favorite sections that we have here in Market Week is our stocks, our view for next week, and it's a very short-term view where we look at daily charts, and we're about to show you.
Next is Slim's short-term view for the coming week. Watch as shorter-term charts are used to project 5 major markets in price and time. And there is also an emphasis on momentum to help keep positions set with the highest odds of catching the biggest short-term moves.
Going on while I work through some of the glitches on that, so sorry about a black screen there. All right, we're going to bring you our best and worst stocks for the week as we look at daily charts in here. So we'll take a look here. So we're going to put up the first one in here, and that is /CL. Let me just get a close look in here. I like to talk about, before I show you anything in here in CL, about our just great new products that we have coming up. We have the snapshot, which we're getting rave reviews on. This is for short-term traders. What we do is we bring you analysis for the short term every single morning before the markets start on the S&P 500, the NASDAQ, the Russell, and that has been just amazing. We show you our acceleration zones, where we think if it gets into, it's likely to move. It gives you an opportunity to project and get much bigger winning trades. We've gotten lots of comments on that, so make sure you write us and let us know how that's worked for you. We have a special going on right now, 14 days for $14. You can get a good look at that, and you'll get all of our other level 2 400 videos plus to learn about trading, and level 1 reports that we put out, all included in that for $14 for 14 days. Or we have a 3-month special for 25% off the 3-month rate. That's 33% off the monthly rate, so you save a ton of money, and you'll be able to see everything in there. So that's a great deal. Plus our new Slimulator, which shows you algorithmic projections like you have never seen before. You really have to look at this. It takes into consideration our analysis on many different time frames, shows you also our option bias indicator, where we think each of these stocks, ETFs, and futures are going to go. It includes the indexes. Just amazing in there. We're ending our beta in there, and there's specials available also. So those of you that have enjoyed our beta program on the Slimulator, we're now getting ready to launch it. So check with Matt, and that's Matt, M-A-T-T, at askSlim.com. He's going to then show you, he'll send you a sample, and also if you wish to get the links for those specials that we have in both of those products. If you do the Slimulator, you're in level 3, and you'll get everything in level 2, the snapshot, everything, all the videos, all the level 1 stuff, just tremendous specials, and just an unbelievable opportunity for you to do some great learning in the market and get some great help on your trading. So please write Matt, M-A-T-T, at askSlim.com. All right, so now we're going to jump into this short-term view for the coming week. We were really quite good this week. I'd put us at over 70%. I think we got wrong was really the dollar was a little bit stronger. It followed the form we were looking at. We thought we would see an up week in bonds. It screamed. We thought we'd see the S&P's top early, try 30.32, and then go down for the week. That was all accurate. Light crude, we thought it would be a small down week. Well, at one point it was much bigger than that. But and gold, we thought it would chop around and then go up for the week. And we gave you the range, and it just popped through the top of the range. And we have been just really good for the last several weeks in our analysis. So what are we going to do for you now? That's the question. Light crude, you could see our projection in there. It hit our sell zone and then moved down very sharply. We're looking for light crude to attempt a modest little rebound here, which it's doing, and then move down again. Momentum is negative in there. You could see the slim ribbon coming down. You notice the red bars on the bottom. That tells you negative momentum. We think it's on its way back down to about $53 in the next 2 weeks. So light crude, we're going to call a down week coming up in there. And so a rally attempt's likely to fail. It might make it down to about 52.80 under the next couple of weeks. The next one we're going to look at in here is gold /GC. And we're going to zoom in for you right there. So gold, we thought would be stuck in this range between 1402 and 1450. The low right over here, 1408 or 9. The high that it got to today was around 1460. So it was a slightly higher range than we had anticipated. It's in this fib extension zone right now. We're going to raise up this projection zone because of the way this is forming. And you can see that it potentially could get up here to about, we'll call it 1475. We're going to raise the bottom of the range to about 1427. We still think that this period out later in August will be a corrective period that exists. But we're in this window right now. You see these cycles that are rising in here, silver, gold right in there. We could blast out of this range right over here and blow out on the upside before we actually have that correction. So I've been saying every single week the risk was to the upside, that if it was going to blow out of the ranges, it was going to be on the upside. I still think that's the case. The slim ribbon has been bullish. You can see this momentum where it turned bullish over here at around 1340, and it made it all the way up to 1460. So positive momentum that we're looking at in there, and the likelihood that it was going to continue to move to the upside. So again, we're in a corrective period that we think is modest. That's going to probably keep it in these narrower ranges with a much better probability that it blows out on the upside than it does on the downside. So that is a look at gold. Next thing we're going to look at is $DXY. That is the dollar index. So what we thought that the dollar would do would be to rally and then turn down, that it would have a small down week. Well, you can see in here that it acted as it did. It got through the target zone on all of this background news and then backed off. Now it's come back down to the slim ribbon. So we have raised up our support area in there. And now the expectation is that it's going to come down, and we'll call it for a small down week in there. Momentum still strong. You could see the slim ribbon. That really is the tell in there. And so we're going to expect it to get down into that support buy zone, and that's where we think it will bounce and begin to move up again. And that comes down to 98.07 down to about 97.80 right in there, and then likely to be moving up. You could see this shifted cycle in here. That's the dotted one there, and that's matching this cycle right over here on the top. So we'll look for a small down week in the dollar, setting up what would likely be another rally. So now we're going to switch over and we're going to look at /ZB, which is the 30-year bonds. This was just unbelievable. Huge upside move in there. Momentum today has turned positive. You could see that green arrow right there. Now note this cycle and how the correction was flat. Now, for those of you that are following and watch Future Speak, which is our Wednesday video, which you should not miss, it gives our much deeper analysis than this, we had been talking about that it was running out of time on the correction and that it was likely to start moving up. We had projected that this was the time frame that it was going to start moving up. And sure enough, you can see this move, and it probably has more. You can see that fib targets up there, those fib extensions. We think that there's a probability that it is going to get up into that zone. That's about 60 3/4 up to about 63, depending on how weak the stock market is, and it is very weak right now. So we're going to look for it to get really over 61. In 161. We'll call this a small week because you can see this cycle in here. We think it'll get up in here and then begin to move down again. It really looks like potentially a small week. We're going to lean to the positive side and think that if it's anything, it would be to the upside. Downside still should be quite modest, so we'll have a small positive leaning, definitely with that improvement in momentum. And with the stock market as weak it is and money finding a flight to safety into the bond market, I don't think the stock market's going to be able to hold much of a bounce, so that's going to keep a bid in the bond market. So let's talk about the stock market. SPX, we're going to look at that here. And we had this projection right up over here around 30.32. It got up to 30.28. Just absolutely fantastic. I want you to note that the slim ribbon, which was positive here and drove it up here, has now turned neutral. And it's not going to take long for this to turn bearish. Now, see the dotted cycle on the bottom? This should really be a point where it starts to rebound. But then if it does, you can see the sell zones in here. So we think that it's going to try an early rebound during the week and then fail. We're going to look for 29.57 to 29.72, this bottom part of this resistance zone here, and then move down sharply after that. You can see the projection here is down to about 28.75 over the next week and a half. So right now, that's only 45 points away. It's not that far. Now, note the 89-day moving average coming up right over here. So that and this weekly support right over here, which we moved over from the intermediate chart, that's kind of probably going to hold it here, right? Near the 29.10 area. and then get that rebound. So we'll look for a few days attempted rally in there and then likely moving down. This is a much weaker situation, and you can see that topped. I mean, that really is a problem. And when you get the momentum lost like it did right in this area over here, you can see that brought some very significant selling in during that period. So usually when you get the momentum breaking down like you did, I'm just going to go way back over here. You see the breakdown right at this point. Well, that set up a very major decline. As a matter of fact, like a 600-point decline once it broke down. So that was back last October. So the situation in here that we're looking at right now is really bad. I mean, on the short term, it gives you negative signals. And that's why I say to you, I think the topping process has begun. When we get past these next couple of weeks, we're going to probably get more rally. And I think into the fall, test these numbers, but maybe some non-confirming rallies. Overall, I think it's done with. And like I said, the last several shows, I thought there was only 1%, 2%, 3% potential on the upside and a lot more downside. Well, I think that there's almost no potential for upside making new highs anymore. So I think there's a lot of downside risk based on what I see here. It's based on the ability to break these supports, to break down, change momentums, and we listen to those things because they're so important. So the stock market giving us some very bad readings. We're going to look for an upside attempt under a condition of weakening momentum that will likely fail and likely give us a very, very good shorting opportunity. That is the show for today. I hope that you have really enjoyed what you were seeing and that you have a really productive week, and some of what we showed you has helped you and continues to help you. We love to get your comments. Put your comments either on our YouTube video. You can put your comments also in emails to us, slim at askSlim.com, or to Matt, M-A-T-T, at askSlim.com. We'd love to hear from you, hear your comments. Try the Slimulator, try the snapshot. If you're a short-term trader, you're going to just love it, love it, love it, as so many people do. Try those trials. I want you to be so careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city.